Blockchain-based representations, how belief becomes market. Summary statement. Blockchains transform reality into programmable representations, allowing assets, outcomes, and beliefs to be priced, combined, and settled before events crystallize. This representational shift enables new forms of coordination, risk management, and market formation. Bitcoin stands apart as the sole native digital bearer asset, while the broader crypto ecosystem builds a layered economy of receipts, options, and narrative claims that increasingly shape reality itself. Section 1. Introduction. From assets to representations. Traditional financial systems are built to move assets. They assume value is heavy, slow, jurisdiction-bound, and institutionally mediated. Blockchains invert this assumption. They do not primarily move assets. They move representations. This distinction is subtle but foundational. Once something can be credibly represented on-chain, money, ownership, outcomes, or expectations, it becomes lighter, faster, programmable, and globally expressive. What follows is not just efficiency, but experimentation. New markets forming around things that were previously untradeable, uninsurable, or unpriceable. This is the core innovation of crypto. Section 2. The primitive. Blockchain-based representation. A blockchain-based representation is a cryptographically verifiable, digitally native proxy for a real-world asset, claim, event, or state, capable of being transferred, combined, and settled without moving the underlying thing itself. The receipt analogy is instructive. A physical receipt is not the groceries, it is proof that the groceries exist. Because it is lightweight, it can move, be shown, combined, or referenced far more easily than the goods themselves. Blockchains do this at a global scale. Key properties of representations include credibility, meaning they are anchored to something real or agreed upon. Programmability, meaning rules can be embedded such as expiry, redemption, or conditions. Composability, meaning representations can be combined with one another. And global reach, meaning no reliance on geography, banking hours, or intermediaries. Crypto does not create new realities. It creates new ways to express reality. Section 3. Canonical examples of the representation stack. Stablecoins, money as receipt. Stablecoins are representations of fiat currency, most commonly the United States dollar. They succeeded not because the dollar was new, but because the representation was better. A stablecoin separates the dollar from the banking system, geographic restrictions, and access constraints. For users in high-inflation economies, this unlocked something profound: the ability to hold dollars without a dollar bank account. Stablecoins proved that representation alone could create massive demand and utility, validating the entire crypto thesis. Options and prediction markets. Outcomes as claims. Options represent conditional futures. They allow someone to say, if X happens, I am protected. The critical feature, especially in crypto, is that options have a known cost, cannot be liquidated mid-course, and settle only at expiry. This contrasts sharply with perpetual futures, where correct long-term views can still be destroyed by short-term volatility. Prediction markets extend this logic further. They are binary smart contracts that represent claims about reality, yes or no, happened or not. They are options on outcomes, not prices. Together, options and prediction markets represent uncertainty itself. NFTs, uniqueness and provenance. NFTs represent singular ownership and authenticity. They are receipts for uniqueness. While popularly associated with art, their deeper contribution was proving that non-fungible concepts, identity, provenance, originality, could be represented and traded digitally. Fractionalization later showed that even uniqueness could be layered and recombined. NFTs expanded the representational frontier beyond money and outcomes into identity and cultural value. Tokenized equities, ownership and governance. Tokenized equities represent corporate claims, ownership, cash flows, and sometimes governance rights. Their promise is not disruption of companies, but disruption of custodianship. By representing equities on-chain, fractional access becomes native, global participation becomes trivial, and governance rules can be programmable, such as time-weighted voting. Again, the asset is unchanged. The representation is transformed. This content is brought to you by Bobby Giggs. Promote your brand here and reach a wide audience across platforms like YouTube, Instagram, and Facebook. Follow the links in the description to get started. Section 4. Recipes, intentional recombinations. Once representations exist, Innovation shifts from invention to recombination. A recipe is a deliberate combination of primitives, representations, rules, and incentives to create a new market behavior. Stablecoin and options. Inflation insurance. In emerging markets, holding United States dollar stablecoins protects savings, but not livelihoods. Inflation arrives in shocks, not smooth curves. Timing risk, income mismatch, and sudden devaluations can wipe out cash flows even when long-term dollar exposure is correct. Options solve this. Paying a small premium for an option that pays out during severe currency devaluation is analogous to fire insurance. You do not buy it because you expect disaster. You buy it because ruin is unacceptable. Stablecoins store value. Options insure it. Together, they turn inflation from an existential threat into a priced risk. Section 5. Narratives before they crystallize. Narratives move before facts. Markets typically price earnings, elections, and inflation prints, but narratives shape expectations, confidence, legitimacy, and alignment. By the time something is measurable, the narrative has already won or lost. Prediction markets allow narratives to be expressed, disciplined, and priced before crystallization. They do not predict the future so much as force stories to define what would count as real. This is where crypto moves upstream, from assets to outcomes to belief itself. Section 6. Structure and resolution of narrative markets. Narratives must be separated from resolution. Take the example, will Trump snatch Greenland? As a narrative, it captures attention. As a market, it must resolve cleanly. The correct structure is narrative question, human, claim, institutional, resolution trigger, objective receipt. For example, will a bill be introduced in the United States Congress proposing the acquisition of Greenland before January 20th, 2029? This forces clarity. Trump can propose. Congress controls the dowry. Denmark and Greenland retain agency. China entering as a second suitor becomes a red line receipt. Narrative markets trade the story, but settle the paperwork. Section 7. Bitcoin as the exception. Everything so far has involved representation. Bitcoin is different. Bitcoin is not a receipt for something else. It is a natively digital bearer instrument. There is no issuer, no redemption, and no underlying asset. The receipt and the thing are the same. Bitcoin is layer 0, the ground beneath representations. All other crypto abstractions sit above it, introducing optionality, claims, and risk. Bitcoin introduces none. Possession equals ownership. Transfer equals settlement. This exception anchors the system. Section 8. Implications. Markets that shape reality. When belief becomes marketable, narratives harden faster. Coordination accelerates, risks become insurable, and power structures are revealed early. This applies to geopolitics, culture, economics, and governance. Prediction markets act as social seismographs, registering pressure before rupture. But this power carries risk, manipulation, reflexivity, and self-fulfilling dynamics. The absence of pricing does not remove narratives, it merely hides them. Section 9. Open frontier. What hasn't been represented yet? We have represented money, ownership, outcomes, and belief. Still largely unrepresented are human intent, reputation, trust, legitimacy, and commitment. These are upstream forces. Representing them would unlock new forms of coordination and new risks. Conclusion. The new market layer. Blockchains do not merely digitize finance. They create a new layer where reality is abstracted into representations, combined into markets, and settled by code. Bitcoin is the ground. Crypto is the representational explosion. Prediction markets price belief before fact. Markets no longer wait for reality. They increasingly shape it.